Welcome to The Explainer. Today, we're tackling a pretty wild story from the financial world. In 2025, the year the everyday investor completely flipped the script on Wall Street. This quote from an investor named Josh Franklin really gets to the heart of how Wall Street used to think. For decades, individual investors, what they call retail, were just dismissed. It was this idea that they were the dumb money. So the big question is, were they wrong? Well, in 2025, the data tells a totally different story. It's a story about a group that didn't just get lucky. They played the game their own way, and they won. All right, let's get into it. So, first things first, we gotta unpack this whole dumb money idea. For decades, this was the label for the average person investing. The stereotype was that they were unsophisticated, always a step behind, and made decisions based on emotion, not strategy. Yeah, this whole narrative, which even got its own Hollywood movie, was that they were basically gamblers destined to lose their shirts to the professionals and their fancy algorithms on Wall Street. But here's where it gets really interesting. The numbers from 2025, they don't just poke holes in that myth. They blow it wide open. This was a record-breaking year. Just look at this. Retail investment flows went through the roof. A surge of more than 50% from the year before. That's not just a small increase, that's a flood of money coming into the market. And get this, this wasn't just some rebound. The level of activity was actually 14% higher than the absolute peak of the whole meme stock frenzy back in 2021. So yeah, this was a whole different ballgame. And here's the kicker. It wasn't just about showing up. They won. Data from JP Morgan actually shows that the average retail portfolio had a better profit-to-loss ratio. Basically, they made smarter bets than these super sophisticated, professionally managed funds focused on hot sectors like AI. They weren't just participating, they were outperforming. All right, so the million-dollar question, how did they pull this off? Well, it wasn't just luck. It really boiled down to two main strategies. Okay, strategy number one is a classic for a reason, buying the dip. And man, did it work in 2025. It was actually the second best year for this strategy, going all the way back to the early 90s. So while others were panicking during downturns, these investors saw a sale. And the second strategy? It's a bit more specific. It got the nickname the Taco trade. Now, that acronym originally stood for Trump always chickens out. And the idea was basically a bet that any market dip caused by a big, loud policy announcement from the White House would be temporary. The thinking was buy in when everyone else is scared because that policy is probably going to get softened or reversed. And we saw this play out perfectly in April. The White House drops this huge tariff announcement, right? The market tanks. The pros are selling like crazy. But what do retail investors do? They jump in, pouring a record $3 billion into stocks. And what happens just a week later? The worst of the tariffs get paused, the market roars back, and, well, you can guess who was sitting pretty. And people on Wall Street noticed. You've got Mark Malik, an investment chief, basically saying, hey, these retail folks have been more right about the market this year than my own colleagues. That's a huge admission. So what's really important to grasp here is that this wasn't just a lucky streak. All the signs point to a real change, a fundamental shift in who the retail investor is today. Just think back to the meme stock days in 2021. That was all about sticking it to the man, right? A few hyped up stocks. Fast forward to 2025, and you see a totally different animal. These investors are using actual market data, they're thinking about long-term goals, and they're diversifying into things like ETFs. It's more grown up. So what's behind this change? Well, analysts are pointing to a few things. First, access to information is way better now, but it's also a mindset shift, a bigger focus on long-term goals, not just quick wins. They're using more diversified funds, and honestly, they've been through some wild market swings before, so they're a bit more battle-hardened. And you can really see this change in the younger generation. Just a decade ago, you had maybe 6% of 25-year-olds actively investing. By 2024, that number exploded to 1 in every 3. We're talking about a whole new generation that sees investing as a normal, necessary thing to do. Okay, so they had an incredible year. But that brings us to the really big question. Was this just a flash in the pan? Or is this new power player here to stay for good? Now, we have to be realistic here. Even the experts will tell you that, yeah, there was definitely some luck involved. The market conditions in 2025 were just perfect for these kinds of strategies, so it might have been a bit of an exception. Because the true test isn't a quick market dip that bounces back in a week. No, the real test is a long, painful, grinding bear market. That's what will show us if this new generation of investors really has the stomach for the game. And that's really what it all boils down to, isn't it? Has the game really changed for good? Or did dumb money just have one incredibly lucky year? That's the question we're all waiting to see answered.